Hi, I'm Garth McKenzie from traderscorner.co.za. This is your weekly look at the S&P 500 and the Nasdaq indices. So we'll start with a look at the S&P 500 daily chart. And what we're looking at here really are markets that are quite range bound. You'll see both on the S&P 500 and on the Nasdaq. Both are fairly range bound at the moment. On the S&P 500, the key level down at the bottom of the range is 4150. Up at the top of the range, that round figure at 4,200 has been sticky over the last week. You can see last week the price did try to pop above 4,200, but it didn't last very long. It came back underneath that level, and it's subsequently been bumbling around at that round figure of 4,200. And really for a week, just over a week, there's been very, very little volatility in this market. It's really been quite range bound and stuck around that 4,200 area. You can see negative divergence on the stochastic oscillator and the RSI on this chart. And what that implies is that the upward momentum of this generally rising trend is slowing somewhat. And often what can occur is that negative divergence can precede a possible change in trend direction. So it's not saying it will definitely happen, but it's a possibility that it could be a warning of some weakness to come. Then let's take a look at the hourly chart on the S&P 500. There you can see more recently in the zoomed in trading action where we've got all of that range bound trading activity over the last week. But the key levels to watch in the very near term are 4175 at the lower levels and then 4,200 at the upper levels. A break below 4175 probably sees it heading back down to 4150 and possibly even to 4120. And then if we were to see a break above 4,200, that could arguably be a bullish break if it were to follow through. And then we'd probably be looking at a move up to about 4260 or 4280, that area somewhere there. So those are the levels to watch on the S&P 500 in the very near term. Let's then draw our attention to the Nasdaq 100 chart. So it's a daily chart first that we're taking a look at here. Again, range-bound trading activity has been evident for the last couple of weeks. The bottom end of that range is at about 13,700, the upper end at a round figure of 14,000, and you can see the market simply bumbling up and down within that trading range. Again, here we've got negative divergence on the RSI and on the stochastic, both of those indicating a possible slowing in the rising trend and the rising momentum of this market. So a little bit of a warning sign, but I would say that the range is intact until such time as we see a break below 13,700. One's got to give the benefit of the doubt to that range remaining intact until it's broken. And then, of course, on the upside, if we were to see that market breaking convincingly above 14,000, well, then that opens another leg to the upside. And we'd possibly see then a move up towards 14,300, maybe 14,500. Lastly, let's take a look at the Nasdaq hourly chart. There, that just simply shows you that recent trading range more clearly. 13,750 odd at the bottom, 14,050 up at the top. Market has been bumbling up and down inside that range now for a couple of weeks, and it remains the case. Looking a little bit weak right now, so we're going to have to watch and see how that bottom of the range holds, whether that support does hold, and if it does, possibly a bounce up off that level. But if it doesn't hold, if we see the market breaking down under the bottom of that trading range, then it could potentially signal weakness back down to about 13,300. So those are the levels to watch. Really not very interesting at the moment, given that both of these indices are very range bound for the time being. But those are the range boundaries that we've got to keep an eye on in the near term. That's all I've got for you this week. I'll be back again next week with another look at both of these indices.